With gold and silver prices currently soaring, more people will be moving to physical precious metals as an investment to try and capitalize on the momentum in the market. Now, this uptick is obviously great for those who have previously invested in precious metals, and it's going to be really enticing to those who have maybe been on the fence about shifting some of their assets to physical metals, but have yet to pull the trigger in doing so. So you're going to see a lot of people flooding to the precious metals market. Now, with this, I think it's really a perfect time for me to explain the safest way to invest in precious metals and what it looks like to invest in precious metals inside a self-directed IRA. You've probably seen your favorite influencer or podcaster talk about holding physical gold in your IRA and protecting your retirement with gold and all of this fluffy stuff. And it all sounds great. You know, you're going to hold real physical gold and tangible gold and silver in your retirement account. But what those ads don't tell you really could cause more harm than good. They really, really could. Now, self-directed IRAs are legitimate, but the physical precious metals industry is not regulated. And this is really important to understand. The physical precious metals industry are basically considered consumer goods. And they're bought and sold just like you'd buy a t-shirt at your local Walmart. This also means that the industry is extremely susceptible to shady dealers and practices. You know, it's like the difference between buying a t-shirt for like 15 bucks at Walmart versus, you know, $50 at a high-end store that is selling you the same thing. So by the end of this video, hopefully you'll understand exactly how all of this works. You'll understand what a self-directed IRA is, what custodians and depositories actually do, and what their role is in the self-directed IRA process, what spreads and premiums mean, and how to protect yourself from overpriced gold and deceptive sales pitches. Now, a self-directed IRA works just like a traditional IRA. You can contribute pre-tax dollars to the IRA, your investment grows tax-deferred, and you pay taxes when you withdraw the money in retirement. Or assets, you can take the assets out, I suppose. Now, the difference between that and a traditional IRA is fairly simple. So the self-directed IRA gives you control over the type of investment that you have in your IRA. So instead of just stocks or mutual funds, you can own alternative assets like real estate, private businesses even, cryptocurrency, or physical gold and silver. And this flexibility can be really, really powerful, especially if you want to invest in alternative assets that can really be a good hedge against inflation or instability or stock market swings. You know, some of these claims are true. The gold is clearly able to do that and has proven to do that. But with that freedom comes risk and a lot of responsibility. So when you move your IRA into physical gold, you're stepping into a space that's very loosely regulated, and it's filled with companies that prey on retirees who don't know how the industry or pricing really works. So let's clear up some of the confusion. When you buy gold inside a self-directed IRA, there are three parties involved. First, there's the custodian. The custodian is an IRS-approved financial institution that sets up and manages your IRA. So they're the ones that handle all the paperwork. They file the reports to the IRS. They make sure that you're staying compliant, that if you take a distribution, they're the ones that tell the IRS that you've taken a distribution and so on. Their job is purely administration. It's not sales. It's not recommending you a dealer. It's not telling you the types of coins you should invest in. It's purely administration. The whole purpose of a self-directed IRA is for it to be self-directed. You're in control. Second is the dealer. And this is where it can get really hard. The dealer is the one who sells you the actual gold or silver coins, bars, bullion, whatever it may be. They're the ones who make money from the markup and from the spreads between their buy and sell prices on coins, bars, bullion when you purchase from them. Third is the depository. And this is where your metals are going to actually be physically stored. These are secure, insured vaults, and there's plenty of them across the United States, from Delaware to California, Utah, so on and so on. Now, unlike some schemes, and some dealers might try to tell you that there's, this supposed home delivery gold IRA, which was actually a scheme that was coined by the owner of the company that I worked for. They'll tell you that you can keep your IRA gold at home. This is simply not true. It has to stay in an approved facility. There's a lot of reasons behind this, but one of the main is self-dealing, meaning that, you say that you have $100,000 of assets in your IRA, but the reality is you've actually sold them because you had access to them. This distinction is very important, and keeping them in a secure vault is very important to not violate your IRA. Now, while you do get to choose which depository your assets are stored at, you don't get to store them at home. Now, one of the ways some investors get misled is that some dealers pretend to be like a one-stop shop, and they really blur the line and make it sound like they handle everything in-house. But in reality, the dealers are simply there to employ salespeople to sell you coins. Now, they might help you through the process and so on, which is great, but they aren't a one-stop shop. There are multiple entities involved. It's really important to understand that the salespeople and the company completely depend on the profits that they're going to make from the assets that they sell you inside your IRA. So let's talk about pricing, because this is where you're going to be really susceptible to losing money. Every precious metals, whether that's gold, silver, platinum, palladium, whatever it may be, has what's called a spot price. Now, that's the current market price for 1 ounce of pure metal. But when you buy a gold coin or silver coin, whatever it may be, you're always going to pay more than the spot price. And that extra amount between the spot price and what we call the ask price of the coin is called the premium. Now, the premium covers the minting of the coin, the handling, the insurance, and the dealer's margin, the amount that they're going to keep in profit. So for common bullion coins like the American Gold Eagles or the Canadian Maple Leafs, a fair premium might be like 3 to 8% above spot, maybe 10% if the market's going crazy like it kind of is now. And again, this really does depend on a lot of market factors. But some dealers are going to try to convince you to buy so-called exclusive or premium or semi-numismatic coins or even proof coins so that they can charge you outrageous premiums. And I'm talking like 30, 50%, maybe even over 100% over spot. At one time, at the company I worked for, they were charging like 170% premium over spot. Now, here's the problem. If you pay 50% over spot, let's say, gold has to go up a little over 50% just for you to break even. And that's before we even get to the spread. Now, in traditional investments like stocks, bonds, and so on, no one would go and intentionally invest in that stock or product, whatever it may be, knowing that you're immediately going to lose like 30, 50% of the value of that investment, right? You're not going to go out there and go, hey, I'm going to buy this stock knowing that tomorrow that stock's going to crash and I'm going to lose 50%. You just wouldn't do that. So the question becomes, why would you do that with precious metals? Well, you wouldn't, at least not intentionally. So it's really important to always focus on coins and assets, bars, rounds, whatever it may be, that are as close to that spot price as possible. This means focus on simple, recognizable bullion, not collectible coins, not premium coins or exclusive coins or semi-numismatic or proof coins or commemorative coins. You are looking for bullion coins, bullion rounds, bullion bars that are IRA approved, specifically that you can hold in your IRA that are very, very close to that spot price. Now let's talk about the spread. Now the spread is the difference between what a dealer sells a coin for and what they'll buy it back for. So what they sell a coin for is called the ask price, and what they'll buy it back for is the bid price. Just a quick example here would be if the spot price of gold is $2,000 and a dealer sells you a coin for $2,100, that's their ask price of that coin, but then they're only willing to buy it back for $1,980, That's a $120 spread, the difference between $2,100 and $1,980. So that's about a 6% spread. That's about typical. Now you'll notice the bid price of the coin is actually less than the spot price per ounce. Now this is normal, but it's usually fairly close. You're not going to see these huge swings. Now let's say that same dealer sells you a coin for $2,800 and they're only willing to buy it back for $1,800. That's a $1,000 spread, or 36%. And this is not normal. And it's going to lead to massive losses. Now, if you were using that same spot price of $2,000, that means that they've marked up the coin $800 instead of $100, and you're going to get $180 less in the bid price than you would with the traditional bullion coins. This is one of the ways that you can really tell whether or not a dealer is being deceptive and trying to scam you. So just really pay attention to these coins, because it can be a very huge red flag if there are huge markups above spot and huge spreads. And with this 36% spread, which is very prevalent in the market and in the segment of the market that I worked in, you're really down over a third of your investment before you even get started. And this is why understanding spreads is very critical in making a purchase and what dealer you're buying from. Really, what you can kind of boil this down to is the bigger the markup and the bigger the spread, the harder it will be to ever recover your initial investment. So really, if you're struggling to make up your initial investment, it's going to be really hard for you to make any gains in the market at all. And remember that those inflated spreads and these markups are usually hidden behind coins that they call exclusive or premium or semi-numismatic or proof. All of those terms, anytime that they talk about, the coins being limited mintage or, rarer than traditional bullion or whatever it may be, ignore all of that marketing hype. Ignore all of the bold claims. If they tell you that these assets are better than those assets, whatever it may be, ignore it all. For the purposes of your IRA, an ounce of gold is an ounce of gold. Its melt value isn't going to change just because someone polished it a little more or has some exclusive agreement or puts it in a velvet box. You're looking specifically to keep your price as close to that spot price as possible when you're investing. So how do you set up a gold IRA correctly? Well, one, choose a reputable custodian. There's tons of them out there. Look for one that's independent, that isn't going to refer you to a specific dealer. That's a red flag. Look for one that's obviously IRS approved, that specializes in self-directed accounts. There's tons out there. Step two, you're going to fund your IRA. So you can roll over money from an existing IRA or a 401k, or you can just make a new contribution to your account if you're looking to do that. Now, step three is when you select your dealer. Remember, this is a self-directed IRA. You are selecting your own dealer. The way that you're going to do this is you're going to go to multiple dealers and you're going to compare quotes from those companies. You're going to ask for a written quote that lists the spot price, the markup and the spread, and the total cost of your coins. If they won't disclose that and don't want to talk about that, just walk away. It's very simple. Just walk away. You should never feel pressured into buying something. You should never feel as though someone's intentionally trying to hide something from you or doesn't want to disclose something. If someone's hesitant about doing that in this market and in this industry, walk away. Then step four, the best advice I can give you is buy common bullion. Stick with coins like American Eagle, like American Gold Eagles, American Silver Eagles, Canadian Maples, or bars or rounds from recognized mints that you can go to different dealers and get multiple prices from dealers on. And oftentimes you can go to dealers, if you're investing a large amount, you can go to multiple dealers and be like, hey, dealer A said that they'll give me this price and your price is 5 cents more. Are you going to shave 6 cents off, a price per coin? It doesn't sound like a whole lot, but this is where we get into with real legitimate dealers. They're going to fight over those pennies because they want to get your business. Just look for coins that are easy to price and that are easy to resell. And that typically means stay with common bullion, bars, rounds, coins that are produced en masse and that you can go to any dealer and sell them to at any time. And then step 5, store it properly. Your custodian will arrange the secure storage at the depository of your choice. So choose your depository and then just tell your custodian where to send it once you've received the assets. Now, you'll receive documentation confirming that the metal is stored in your name via your custodian. And again, never take physical possession of the gold yourself. That really does and will violate IRS rules, and it's going to disqualify your IRA, and it's going to be considered taxable income at that point. Now, let's go over a few common scams and red flags. So if you hear any fear-based pitches, like the dollar's collapsing, the banks are failing, there's going to be a bank runoff, there's a World War III is on the brink, right? Like clearly everything's falling apart. The world is ending. You need to buy this gold right now. Let me get you over to Frank and admin to seal the deal, right? That's someone manipulating you. They are using fear-based tactics to manipulate you into making a purchase. Legitimate companies are not going to do that. They're not going to rely on fear-mongering to make a sale. They're going to give you their pricing. They're going to tell you what their spreads are. They're going to tell you what their markups are, which are fairly easy to calculate. And they're going to try and sell you the assets that everyone wants. That's gold and silver American Eagles, gold and silver Canadian Maple Leafs, and so on. Again, if they try to sell you exclusive or premium or semi-numismatic or proof coins or commemorative coins or whatever it may be, these are the tactics that these companies use to justify huge markups. If they're talking in circles and they're not really kind of making sense and you ask a question and they don't really answer your question, and if you just had like a bad gut feeling, if it's not seeming right, just stay away. Find a different dealer. And also, this is a big one too, just stay away from any companies that try to tell you that, oh, this coin's worth more because it's got limited mintage and it's not as widely spread or whatever it may be. And they're creating this fake supply and demand on their coins. Just stay away from them. They are not good coins. I promise you, they are going to be very bad for you in the long run. If they refuse to disclose their spreads and their bid prices, walk away. If you ever feel pressured to immediately purchase and they're trying to rush you to buy and they're using, oh, you got to do it now. You got to do it now. We got to get you locked in. Gold's moving so fast. We got to get you locked in. Again, do not buy. It's a clear warning sign. Good dealers aren't going to rush you. And then if someone's calling you out of the blue, if you get a cold call and they're trying to sell you gold for your IRA, or even if you call them, just remember, these people are not financial advisors. They are not fiduciaries. They don't need a license to practice to sell you this. They need as much license and practice as they would need to sell you a t-shirt at Walmart. These people are typically commission salespeople. Maybe or at legitimate companies, typically they're just on salary. So they're there. Their job is to just close trades. You call in, you tell them what you want, and they sell you it. That's the two ways to do this: is commissioned or non-commissioned. Look for the non-commissioned ones. They're usually the good ones. Now, it's not all bad because investing in gold really can be a very good way to diversify your assets, and doing it in a self-directed IRA can be a smart and stable way to do that. But this really only works if you understand the process and what to buy. So just a quick recap: choose a reputable custodian, buy common bullion close to the spot price from a good dealer. Know what the spreads are going to be before you buy. Know what the markups are going to be before you buy. Avoid collectibles and high pressure sales tactics. And the last piece of advice I'll give you is, if you have a bad gut feeling about something, trust your gut feeling. If something seems off, don't let fast talking salespeople con you into buying their coins. And if you do these things, then you will own real tangible gold inside of your IRA. And you'll do it without falling into any of the traps that have cost many others their life savings. Hey guys, thanks for watching. If this video helped you, please drop a comment in the comment box below. Hit that like button and subscribe. And if you want to learn more about the gold industry and the segment of the industry that is intentionally set up to defraud retirees of their funds please check out my book, The Gold Grift. It's available now on Amazon. It also goes into detail about how you can avoid these scams, what to look for, and what to do if you have been a victim of one of these companies.